think inflation goes up from here?
Yeah, I mean, so it's not scheduled to. Let me answer this question in the most stupid, wonky economist way possible. There's a high probability that it decelerates and starts to decelerate. We're starting to get to the point in the process, particularly once you get to March, where inflation, the base effects really start to kick in. And so you need to see a substantial acceleration in the current trend growth rate of inflation, the sequential rate of inflation, to maintain the same level of inflation on a year-over-year basis. Now, that doesn't necessarily mean that once inflation starts coming down on a year-over-year basis, that inflation is under control. You could be sort of maintaining the same very elevated level of inflation, sequential, momentum. It's just that the year-over-years are going down because, we already did it last year, basically. And so I think that is a high likelihood of occurring. There was a prior to today and prior to oil, basically going from $90 a barrel to $100 a barrel in one day, there was a high probability that we were going to lose inflation momentum. So not only were we going to win on the year over year, we were going to win on the sequential and the momentum. And the Fed would be able to say quicker, sooner that, hey, look, we got this thing under control. Now it's a function of this move in commodity prices, because it's not just crude oil. And more importantly, what a war could do in terms of taxing the productive capacity of the economy. Like, what if, we might not be sending a ton of troops there. What if Germany and France send a bunch of troops there? What if Ukraine mobilizes and Russia mobilizes more? I don't know. There's a lot of things that could happen that could actually, sort of really become an additional tax on the productive capacity of the global economy. And if that occurs, then we're likely to see, something that looks more like what we saw kind of in the fall of this most recent year, which is supply chain disruptions. And so if that continues to happen, then we're going to have a big problem on the inflation front. That will be a secondary problem relative to what we already have.
Inflation, I believe, will, if we continuously kind of step in, go to war, I think it will get worse based off the amount of money that we're going to have to print.
Totally.
But for the Fed, it seems like they don't have to raise rates, right? Like they would have, I guess, right? So they were expecting everyone from 3 to 9 interest rate hikes. But it seems like it's almost being priced in. Everything got overvalued a little bit. And it's kind of coming back to normal as what we're seeing now, right? Yeah. So are they going to still raise in March, you think?
Yeah, no, I think the Fed is at the worst. Again, I think I said this last week. The U.S. economy is already sort of on this slow, but in my opinion, deliberate road towards recession. Right? We've had persistent, negative real income growth on a per capita basis for months now. And so, how you can have a economy growing on a real basis at all in the absence of stimulus with that dynamic is beyond me and beyond the math of anybody operating Excel or Python or any other program. And so, if the Fed did nothing, it was likely that we were going to have an economy sort of just decay naturally on its way to recession until we got inflation under control, until we had a better realignment of demand with the productive capacity of the economy. The Fed is, in order to control inflation, is effectively trying to speed that process up, right? They think they have the ability to sort of get us right to the brink of recession just enough to get inflation under control, but then to make this perfect pivot and, get us stave off recession and make sure that the labor market doesn't take it on the chin. History is very, very unkind to the Fed and their ability to do that. And I think they probably get better every time, right? They're more responsive. There's more data. There's more people. There's more Twitter. There's more everything. There's more information, right? So they're probably going to be better at it than they have been historically. But that doesn't mean they have the ability to turn the U.S. economy on a dime, to turn the global economy on a dime. There's all these dynamics that happen in terms of credit creation, off balance sheet, in the shadow finance sector, and non-bank entities, that the Fed doesn't necessarily have a real true control over. They have signaling power over, but they don't necessarily have true control over. So it's kind of wrapping this up. I think the key risk here is that we could slide into recession, albeit on a slower pace, if the Fed does nothing and loses its credibility in the process, or we could slide towards recession or even into recession if the Fed does something to rein in inflation. To me, I think the first outcome, longer term, is much worse. Because once the central bank loses credibility, S&P goes from, 4,000 to 1,000. Like right now, so much of the S&P 500's valuation is a function of the Fed having credibility, right? And if the Fed just loses credibility on inflation and its ability to control the business cycle, then I think there's a lot of valuation premium in U.S. assets in particular that is at risk.